for you on your end for the recording. If you want to run a quick test, share your screen, make sure
Yeah,
everyone can see it.
let's do it. Let's do it. Uh,
Okay.
you all should be able to see my trading view screen right about now.
Oh,
Let's go, Shavif. Welcome, man. How are you? Loud and clear. Perfect, perfect. Yeah, so today we're gonna be talking price action models, charter price action models, and yeah, how to use the 2 degrees tools to your advantage with the classic ICT models. Because you all know 2 degrees makes indicators for traders, and not traders out of indicators, of course. So these tools are there to help you and to give you an edge into trading these models, into simplifying your trading life, And we're talking, we're thinking, what could help traders that trade these specific models in what could make it simple for them to know what tools to use with the different models. And so I set out to an adventure to create the perfect layout for each of the ICT charter models accompanied with the right tools. So if you're someone that trades one of the price action models, let's say you trade 6 or you trade one shot one kill number 9, you're able to use it to your advantage with the tools at the same time, right? So what I've done, I've created layouts and we'll be sharing those layouts somewhere. I think it's a little thing we can tease already, I think, right?
oh yeah.
So we'll be sharing those, and I've also created them for the how can I say, the one setup for life, which is a video from the 23 mentorship in which ICT shares, like, I think it's 4 or 5 different models, and I've compiled each of one of them um, into a specific template for you guys to use. So if you're interested in that, just let me know. Thank you for being here. Well, thank you for being here as well. Oh, and by the way, I wish all the people in the States a very nice Thanksgiving. Appreciate you for being here on a holiday. Means a lot. Luckily, it was a very lackluster day on the market, so we could have all have a day off from trading. So yeah, I'm not sure if everyone is familiar with the price action models. Just let me know if you are or if you aren't. Or maybe you know just one or two, because there are some that are more popular than others. For example, I know that price action model 9, otherwise known as one shot one kill, is quite popular. So maybe more people will know that one, uh, as opposed to price action model 3, for example, which is swing trading. I don't know if a lot of people are swing traders in here. I think most of us are lower time frame scalpers, all on the 1 minute and lower. Model 6 is yeah, Model 6 is one of my favorites, honestly. So, yeah, I see a lot of people very interesting coming for a charter member. Ooh, now the pressure's on, man. The pressure's on. Yeah, so these models, they used to be private charter content, but IST decided to release them at the beginning of this year, I think. So now everyone gets to enjoy them. Um, so I thought, yeah, why not make it accessible for people, so they at least have a starting point with the indicators 2 degrees makes into using all these concepts, right? So I think it's a good idea to just highlight every single one of them just to showcase them. And of course, if you're interested in trading one of these models, I'd say um, don't go open a chart and try to trade right away, because you need a lot of context. There's a lot of um, theory behind why they work and how they work, what tools to use in which setting. Because at the end of the day, all the stuff that we have learned from ICT, they're all tools, right? And we can choose which tool we want to use in which situation, right? Um, for example, we're not going to use a hammer if we are working with glass, right? Because we will break the glass and shatter. Um, so you need to pick out the right tools for the right situation, right? So price action model 1 is a intraday scalping model, which makes use of the IPDA 20 look back, right? So we're going to look at the last 20 trading days and determine which PD raise to select based on that. A prerequisite for this model, however, is mastering high probability scalping, that series. So if you're interested in the in trading this, you should sure watch that first and then watch the videos about the price action model one, because each of them has like a normal teaching, which yeah, it's a recorded, yeah, a normal teaching which explains what the model is, what's it about, you know, for who is it. Then there's an amplified teaching which teaches you some uh, market scenarios and application on the chart, and then there's even most of them have a third or a fourth video which is like a full-fledged trading plan and algorithmic theory behind the model as well, right? So the setup overview, I've put out the nice indicator from 2 degrees as well with the little note down here to show you uh, which model you're looking at, right? And then another one which shows you the setup and the entry or the stage, for example, setup, stage, pattern, kill zone focus for each one of them, so you know what you need to be looking at. Yeah, it's being recorded. I'm recording my screen right now, and let me just double check for just to be sure. Yeah, 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 all good, all good. I'll upload it to YouTube and then they will be posted in this in the channel right here in Discord. There's a channel, external resources, and then you go to another. You click on 2 degrees Livestream database, and you should be able to find them there. Yeah, exactly. And if anyone
Yeah,
has
I
trouble
just found the
finding
link
them,
in the chat.
yeah, it's perfect, perfect. Yeah, so you can watch it 3 or 4 times if you want to, you know, whatever you find comfortable doing. So, price action model 1 is focused on buying intraday New York setups, New York session bullish OTE patterns if you're bullish, or bearish OTE patterns, you're bearish, of course. Anticipating a rally to the previous day high or previous day low, right? So we use the intraday OTE to take a scalp towards the previous day high or previous day low, right? So we've used the liquidity depth indicator to showcase the previous day high and low, right? And then we've used the intraday OTE, which is based on London, for you to be able to catch an entry during the New York session, right? Now, okay, we're not on a perfect time to look for sessions or for setups today because we are, of course, in a bank holiday, so it's not the best price action, right? Um, for example, yesterday we would have had a nice trade right here, right? Um, which I even traded, so check out here. I'll send a link in the chat as well. Where are we? Yeah, there we go. Um, where we had an OTE retracement, I'll just draw it on my own for now. Or wait, we can do replay, of course. Retrace to EQ, and then I took the OTE inside this range to scalp it towards the high right here. And what can we see? We have the liquidity depth where we expect a measurement of like, or the increments of 10 above each liquidity pool, right? For it to start digging inside liquidity pools of the daily time frame, right? So, and it also says projecting 10, 20, and 30 pips beyond previous day range. That's a target. And previous day is not limited to the calendar day before today, but rather any previous day inside the current 20-day IPTA range, right? So let's say the previous day would be somewhere below here, and this high would be higher. We could also target that as well, right? As long as it's all aligned with the IPTA lookback, it's fine, right? Then we have price action model 2, which is short-term trading, right? Where we have the stage is the weekly direction, the setup is a range expansion, the pattern it's called execution, and we use the institutional levels as well, right? So that's 0, 20, 50, and 80. Are you guys familiar with institutional levels and how to use them? Yes? No? No? Okay, so this is a teaching that he taught in the core content as well. And it's very applicable to Forex market, right? And even to indices as well. And it mostly revolves around large round numbers, right? So in the FX market, that would be, for example, we would have the large number 1.06, right? It's an institutional level because it's a round number. And you already can kind of get at what I'm looking at, right? You see how the market just gravitates towards those levels, right? I can guarantee you if you plot them out for every round level, you'll see what the magic around those numbers, right? Um, so every 100 pips, we have one of these round numbers, right? So the next one should be 1005, right? Now, how can we then look within this range for institutional numbers? That's where those come in, right? 0, 20, 50, and 80. So what does it mean? We look at 0, 6, 0, 5, 8, right there. 0, 5, 5. There we go. And 0, 5, 2. So that's how we grade those into institutional levels, right? So we use those as a confluence. How do we use them as a confluence? We can look to target, right? Let's say we have liquidity pools that lie just below them, right? We can look for price to then take out the liquidity pool and run towards the institutional level as well, right? And there's also a small or a secret little gem. I'm sure not a lot of people know. I think Supernova knows, and maybe a few other people in here. But you can use those specific levels, right, um, to get pinpoint accuracy on specific executions, right? So just try to look in your chart, look at breaker blocks and look at order blocks, right, and combine them with those institutional levels. Look at breaker blocks and order blocks that are aligned with those institutional levels and see what happens if you would enter at the institutional level instead of, let's say, just the open price of an order block, for example, right? I'll guarantee you'll get some pretty crazy accurate executions by using that, right? So the setup for this, right, is based on let's see, buying under the 4 o'clock open on Tuesday or Wednesday and using a 50 point per, or 50 pip protective stop, for example, right? Can I show an example? I think I can, right? So right here, for example, we have a breaker block, right? Let's see, let's get the price node out. Let's say we want the institutional level, right? Where is it? 150. You see? You just make sure you round the numbers always to 5 to calibrate it, and that's how you'll get pinpoint accuracy, pinpoint entries. Instead of entering at the start of the breaker block, you're now able to do it a little bit higher or a little bit lower, right? So it's nothing crazy. It's not some magic enigma sauce, right? But it's more something to sharpen your edge just a little bit more, right? So price action model 3, which is one that I also use quite often, right? So what does it consist out of? Having the daily chart, looking at the IPTA 20 look back as well, using the COT reports, using the seasonality, and executing on a 15-minute chart using the OTE, right? So the stage for this, can I send the link for the live recordings? Yeah, I'll make sure everyone knows where to find the recording after it's done, right? Because I'm first I gotta upload it to YouTube, maybe compress it a little bit, but we'll be fine. So the stage for this setup, right, is the COT hedging program. Anyone that has seen the core content should be able to recognize what it is and what it does. Just let me know if you don't understand what the COT is, and I'll just give a quick explanation. But essentially, it's this part right here, right? The COT, which is a report that comes out every week from the government, or the CFTC releases it, that shows the positioning of commercials, right? And who are the commercials in the market? The commercials are the one that are essentially liquidity providers for large fund traders, right? So let's say you have large banks or traders. Um, the commercials are the ones that supply the market essentially, right? They are the market makers. So they are most likely always opposed to where the market is going, right? So as the euro is going down, you will see the COT going up, right? Because they are always hedging, they're always at the other side of the market. So we can often see divergences happen within those, right? So for example, right here, you could see that the market here, it's going up, right? While COT is going down, right? COT is going lower while the market's going up. So that most likely indicates to us that it's a hedging program and we'll see the market turn around at some point, right? So that's how we can use the COT to further confluence or further confirm our direction alongside with the seasonality to get in a nice swing trade. All right, then we'll have price action model 4. Let me know if there are any questions, by the way. Feel free to ask them and we can answer anything that comes up, you know. All right, price action model 4, which is position trading, right? And what is position trading? It's basically swing trading, but then holding your position for an even longer time, right? So position trading often refers to holding positions for weeks or even months, right? So it's very long-term trading. Um, I'd say almost investing for a shorter amount of time. And in this setup, we use the quarterly shift and the seasonal tendencies, right? So we use the quarters that we can view right here. Every like thicker line is depicting an entire quarter, and the smaller or the lighter colored lines they are uh, depicting the month, each individual month, right? So what do? We look for the seasonality to line up with the chart, right? So for example, most seasonalities, right, or seasonal data suggested lower pricing right here, right? It suggested down moves in this part, right? How do you access the indicator? I think that's a question for two price action. Oh, these are just templates, man. They are multiple indicators put together to give you an edge for ICT's own price action models. Yeah. So as I was
And
saying,
then, as Aseno Time was saying, these
oh, I think the audio cut off, or is it me?
does it really? I think Discord is just messing with me because of the sauce already. What I was saying is that the price action model layouts will be shared later. We'll put them all in one place.
Yeah.
And actually, a funny story about that is that when Josh and I first starting creating indicators together, he's a charter and he didn't tell me, and the price action models weren't out yet. So we basically started coding and basically piecing these price action models without doing it. And then once they were released, he sort of like dropped it on me to say like, you realize you already coded them all. And that was a pretty good aha moment for myself too. So it's funny that these were actually created with that in mind. So the reason why we made these for this reason specifically, because they actually rebuild all of the price action models.
Yeah, that's funny because at first you really didn't know about them, right? Because they only released this year. So is it then that you only realized it this year as well?
Well, I didn't know of them. Let's just say that I'm not a charter, but it somehow some way had them. But when they came out, it was more apparent, and
Yeah, right.
it was definitely a light bulb moment for some of not just myself, also other traders that were already with us. And when they dropped, we started getting messages saying, "So I can basically build these, right?" Just the same way that you did it, which is very remarkable.
Right.
I appreciate the time that you spent to just put them together for everyone.
Yeah, for sure, man. I hope some people find some value in it, you know. And even if only one person trades a price action model and makes use of it, that's mission accomplished, you know. That's what we're here for. So, position trading, right? Taking long-term trades. So I've added in the monthly chart, right? Last three monthly candles, so you can reference those as well. Using the seasonality with the COT, right? So you wait for the quarterly shift to happen, you wait for the seasonals to line up, and you wait for the COT to show you a hedging program, and then you can write the euro, for example, all the way down or all the way up as well, right? Let's see, price action model 5, one of my favorites. It's this one is for Forex specifically. Um, it's based around using the specific ranges, right? So somehow, some way he had them. Maybe he dreamt about them all, you know? Who knows?
That's definitely it. The ICT speaks to me in my sleep. That's what it
Yeah.
is.
Dreaming about order blocks. So, price action model 5, as I said, is one of my favorites, right? We use the CBDR, so the central bank's dealers range. We use the Asian range and we use the flout, right? And there's a little checklist um, that determines which one you use in which situation. Luckily for you, you almost don't have to do anything with this template because we have the London session protraction indicator right here, which will tell you to use either the central bank's dealers range or the Asian range, right? If a red number shows up, it means it's not valid to use, right? So in this case today, we could have used the central bank dealers range, right? Which would indicate this standard deviation right there, right? The blue one, right? So right there, or the red one, I'm sorry. Um, the one thing that I added to this is the range deviations, right? Which is the gray box that shows you the float, right? Because what happens if either one of London session protractor? Well, I'd say yes because the CBDR is only applicable to Forex, right? So it's
Yeah,
a.
and also how it was taught in the London.
Oh no, I think the audio fell cut off again.
They're really messing with me, aren't they?
Discord doesn't want you to tell them, man. They really don't.
Well, what I was trying to say, if they let me, is that there's a specific video from ICT that talks about the London intraday protraction, and it's taught only on Forex. So there's specific measurements of Asian range and CBDR that are explained. So translating that into indices would be a little bit tricky without the man telling us exactly what he's looking for. We can somehow, some way bring them over, but it's always been a little bit on our mind to just make sure that we do it correctly. And until ICT tells us what it is, then it's only going to be for Forex.
Yeah, exactly. I agree with that too, you know. As long as we don't have confirmation, we kind of don't know if it's true or not. And personally, I'd rather stay on the side of just knowing what I'm doing, if it's correct or not, you know. And if it's correct, I can be sure of it. And otherwise, I would need a lot of data to support my claim. But yeah, so I added the float as well. So what happens if the CBDR and both the Asian session tell you that they are invalid to use? You can resort to the float then, right? And you use the float for intraday um, protraction and expansion measurements, right? Little tip and trick for this, right? I've added in a look back for it as well, because what you would like to do is search for levels that overlap with each other, right? So if you have standard deviations that line up, right, there's a larger chance you'll see price gravitating towards them at some point if they are overlapping with um, PD arrays, of course, that is. The float for indices is clutch. I've never used it also. I've never used it in the indices, but I'll check it out one day. Let's see. Right, so let's move on. Price action model 6. And I think a lot of people are familiar with that one as well. Or let's see. Oh no, this is 8. Wait. We gotta open price action model 6. Um, model 6, right? So I've added multiple price action model 6s, right? Because there's multiple applications, right? He gave out multiple, let's say, uh, he gave out multiple templates for time frame alignment, right? So let me just do load uh, model 6. So we have intraday, we have scalping, we have intra-week, and we have swing trading, right? There's different ways to use it. So I've added a template for each one of them. Asian range deviations and indices is something. Yeah, I do must say I've only used the opening range ones, right? So Asian Open range, London Open range, pre-market open range, those ones. I've only used those ones for deviations to be honest, but maybe I should check them out as well. So yeah, um, for the swing model, we have the weekly time frame here, the daily time frame here with the COT, and then the fractal consolidations right here, which essentially is just combined with the standard deviation from Dexter, and the liquidity depth is, and of course the PO3 with a dealing range is just an auto MXM, right? What more do you need to do? Like, let's say you're trading this buy model right here. You essentially don't have to do any charting at all, and it just shows you the entire market maker model, right? You don't know the price action models. Well, that's fine, right? If you already have a model, there's no need to know them all. But yeah, I've watched them all, and they all serve a very nice purpose, especially if you uh, are a trader that either also like let's say you scalp and you do swing trading. It's nice to just pick one from the list. We'll be able to find each model indicator on the list. Yeah, right. They're all down here. You can just click on this and then you'll see which indicators are used per template. And we're just gonna release these ones as well. So eventually, just you will be able to just click copy, and you will be able to copy the template for yourself. Then you can adjust the colors if you want to, but these ones are pretty too, right? So I've added one of these for each of the time frame alignments, and there are multiple. We have. Let me see. I made some notes for this. We have the weekly, the daily, and the 4 hour. We have the daily, the 4 hour, and the 1 hour. We have the 60-minute, 15-minute, and 5 minute, and then I also made another one that's just 15-minute, 5 minute, and 1 minute, right? Because there was no 1 minute time frame uh, alignment available. Price action model 7 is one that we're going to skip. Why are we going to skip it? Because it's essentially the same as model 6. Model 6 explains the buy side of the curve, and model 7 just explains the sell side of the curve, right? So it's practically the same. We don't really need another template for that because we're looking at the same stuff nonetheless, you know. Price action model 8, which is the 6% model, right? What's the stage? It's a weekly range expansion. What are we looking for? We're looking for the right day of the week, right? Monday, Tuesday, or Wednesday, and we expect an anchor point to form on either one of those days. Hello, hello, Future Code. How are you, man? Hope all is well. Good to see you here. You're good? Ah, I'm glad to hear that, man. I'm glad to hear. So, what do we look to enter on? Either inefficiency or liquidity runs. And the 6% model, I advise you to look into the trade management, right? Why is it called the 6% model? It's more or less the risk management that it uses. Um, so what he does 1.5% risk per trade, and then after a few trades, you should be at 6%, right? That's what's after. Can you explain how to trade this model? Yeah. So what do we look for? If you look at this right here, is this is daily time frame, right? You look to trade in towards the direction of the weekly candle, right? So if we have a week, let's say this is the opening price of the week, we look to be trading. Let's say we're bearish, right? We look to be entering somewhere inside the wick of the candle, and then write the expansion lower, right? And then we want our anchor for the setup to form either on Monday, Tuesday, or Wednesday, right? So what do I have added here? You can see the days of the week right here with the higher time frame power of 3. So let's say we're looking at to trade the euro, right? And we have the weekly opening right here. It's a Sunday, right? And then you see that we open right here, right? We should be looking to buy below the open of the week if we are bullish, right? So what are we looking for? Either inefficiencies or liquidity runs, right? What do we have here? A run on sell side liquidity. We can use a classic OTE. right? Shout out to Mr. FX for living for this OTE setting. We look to enter inside a fair value gap or PD array within the OTE. So for example, this fair value gap right there, and to then uh, write it along the week for the weekly expansion, right? How can we determine the weekly expansion? Well, we're at least gonna hold it for let's say a day, of course, so for Wednesday, and then today is a bank holiday, right? So what can we know, or what can we do when we anticipate a bank holiday? We can look to take profits on Wednesday and leave the rest running, or we can just close the trade. Or if we're really convicted that we're gonna run higher, we can just let it run. For example, for the internal range highs right there, right? So it's a very simple model. All these models are rather simple. They're all based on just simple OTEs, inefficiency runs or liquidity runs, you know. So it's very simple to trade them. So yeah, as I said, we're looking to short above here if we're bearish, and the other way around if we're bullish, of course, buy below the open.
I'm gonna jump in here for a second. The other thing that you can do, so you know how we have the power of three on the right?
Yes.
If you go into the settings and you turn on the T trades profiling, go a little
Oh,
bit lower, a little
yeah,
bit
we
lower.
have that now as
Okay.
well. Yeah, I created this before we had that, to be honest. So that's a good one.
But if you do that, you basically see the weekly candle and the current daily candles. So you can
Yeah,
see really, Tuesday low of the week and everything else. T is in the chat. Let's go. Hello, brother.
yeah, indeed. This is even a better option. So we're even improving the we're even improving the templates as we speak, man. Turn on the T-spot. Well, we don't have the fractal model in here, man. We don't have it. We don't have it yet. At the weekly profile. Yeah, weekly profile does wonders for this template, right? So now we know where to enter relative to the open price, right? We can see that the open price is right here. So as long as we enter anywhere inside here, we should be fine. And then, of course, there's all types of ways you can determine where you should take your profits. You can do it based on standard deviations. You can do it based on uh, internal range liquidity or external range. It's all up to you, honestly. It's I'm not gonna tell you what you have to do, of course. All right, then we're all the way up to price action model 9, right? A favorite for many people. I know that a lot of people trade this and are fan of this, right? So the one shot one kill model is based on a weekly range expansion as well. And the setup is the day of the week, right? So we look to enter Monday, Tuesday, or Wednesday. Can you do replay to Sunday and example of how you will enter on that week? On this model, yeah, for sure. For sure. Right, so we look to enter, right, on either Monday, Wednesday, or Thursday, right? So let's just get replay tool in here. Let's say we open right there, right? So we can see the build up of the weekly candle, right? So we're gonna say, okay, um, we want to enter below here, right? What do we have? We have a massive gap opening up, right? What do we know about voids? Because this is a void, there's no wicks touching each other, right? We know that voids are, well, we can say they're the highest form in terms of drawn liquidity because they're just voids, right? So the market will look to trade into those voids, right, and fill them up, right? So we're not gonna enter on Sunday on 6 p.m. Of course, we're gonna wait for Monday to form, right? So Monday plays out, and for me, I would not take an entry right yet, right? Because we still have a large part of the void open, right? So for me, I would be looking for the Monday lows to be taken out first, right? Also, if we look at a premium to discount perspective from here to here, we're still in a premium, right? Because we still have to measure it um, with the how can I say with the gap, right? So we're still in a premium end of the range. So I would personally just wait until we at least get a little bit more discount than that, right? So we wait for the inefficiency or liquidity run, right? So we wait for the prerequisites to play out, right? So we wait, and then on Tuesday we get the liquidity run that we were waiting for, right here, and we fill up the void almost completely, right? There's a few pips left, like 2 pips. That's fine for me. Then
And we're
we,
exactly at
yeah,
right at 50%.
exactly. if you measure it out, we've at least reached discount, so we're fine, right? Now we should be able to look for some setups, right? So how can we do it? We can either just enter on a fair value gap, right? In efficiency during the kill zone 2 a.m., which is London, and you need to put your low below here, or your stop loss at least below here to protect yourself in the case of a Tuesday low of the week profile, right? Because that's what we're expecting right now. Um, right? Okay. Or we could just use a OTE setup, right? We put it from the low all the way to the high using the bodies or using the wicks. I'm more of a fan of using the bodies because that's what Ice-T always hammers on about, using the bodies instead of the wicks. So, but it's personal preference, I guess. Um, right? What do we see now? Tuesday opened, or Tuesday closed, Wednesday opened, right? So what can we expect? We have a low, we have our lower low, and now we have a third candle that's being made, right? So what can we expect to happen if you were to move higher? A swing low formation, right? So we should be safe for expansion afterwards, right? Tuesday doesn't do, or Wednesday moves up, moves up, moves up. Where does it move up? It moves into a buy side liquidity pool. It moves into a small inefficiency right there. So that's all areas where we can look to take profit, right? And if we make use of the entire dealing range from here to here, right, you would see that we are nearing the end and in very deep premium of that range, right? So that's where we can start to look to take some partials, right? Um, and let's say you trade forex, it's easy to take partials because you can just close like even zero point 0.1 lot. And on indices, if you have multiple contracts open, you can take partials that way as well. For example, if you trade 6E or if you trade NQ, it doesn't really matter what asset it is, you know. Well, you're welcome, man. You're welcome. I hope this clears it a bit up how we would look at setups, you know. So where were we? Price action, model 9, one shot, one kill. One more thing you said, if you said on Sunday open, if you're bullish, how do you determine that, right? Okay, very quick, we'll go over that, right? Why was I bullish this week? Let's go to the weekly chart, right? What do we see here? Previous year low, right? So we trade into previous year low, we retrace quite sharply, right? What do we expect? If we trade into external range liquidity, we most of the time expect price to move into internal range liquidity, right? So what do we see here? We see a short-term high right there. We have an inefficiency on the weekly. So what do we look for? We look for price to gravitate towards the weekly fair value gap, right? We don't need price to actually trade into it, right? Because we only need a small portion of the pie. We don't care if it goes in there or not. You know, we just use it as a draw, right? So we can just target like low-hanging fruit targets that align with the weekly draw, right? So this weekly fair value gap is the draw. Let's say we move to a lower time frame. Let me mark it out so we know where it is on the lower time frames. Let's just draw a quick rectangle right there, and we'll go to the 1 hour. You see, so once we move here and we shift it in program, right? We shift to a buy program right here, short-term buy program. We can target all internal range buy side liquidity pools, right? All the way up until we are into the weekly fair value gap, right? And if we are to remain order flow on the high, if the order flow on the higher time frame remains bearish, we could see the sell side of the curve start to form around here, and then we can look for short setups in the next week, right? So it's a simple game of internal to external range liquidity at this point, right? So we have the one shot, one kill. I think this is very popular among people. A lot of people trade this. A lot of people use this. I know Future Code uses this, but he has a very advanced, altered version of the simple ICT version. I reckon a lot of people in there have seen have seen his video about it. But yeah, the one shot one kill is a very simple model to trade intra-week. It makes use of understanding how to use fair value gaps, liquidity voids, order blocks. That's the main setup. Uh, yeah, Michael stresses the importance of being flexible and using multiple trading models. And you should just adapt on what the market offers, even if your primary model doesn't present an ideal entry. So that's why we have all the templates for different ones. Let's say you're strictly a forex trader, right? And you're a swing trader. Yeah, you're not gonna be able to do a lot of stuff when where like the monthly chart on the forex account is or on the forex markets is quite neutral, right? It's consolidation. So in that case, you need to adapt and look into lower time frame price action. Use Diamond Hands account from ETF to hold multi-day swings. What's the indicator on the daily? This one, you mean? The top right or bottom right? Both. Okay, so this is the IPDA look back, right? We use the 20, 40, and 60-day look back, right? And then we can do it 20, 40, and 60-day cast forward, right? For shifts and to target liquidity pools that are based on time, right? We reference the last 20 days for PD arrays and active liquidity pools, right? This one is dynamic, so it changes every day. No, this one's free. It's all for free, man. The IPDA look back. Can you believe it? Even this one's free. The economic calendar. We don't even have to open Forex Factory anymore. We can just look at it right here. I made sure to only to include the relevant, right? Automatic. So it's relevant news, right? So for euro dollar, you would see the euro and USD news. On Nasdaq, you would see USD news. Look at this. Do I see some nice fibs being used? The 50 minute. It's a 50-minute chart. So what have we put on the 50-minute chart? We've put on the liquidity depth right here. What are the settings? Previous 3 daily liquidity pools, right? Candle 1 day. Anchored IPDA. I love the anchored IPDA lookback, man. That's a banger as well. But I feel like for this, we are always referencing the last 20, right? So then we have the dynamic one. So yeah, we use the liquidity depth to give us the previous day liquidity pools, right? Right now we had an inside bar. We're having an inside bar today. Um, with the liquidity depth settings as well, 10, 20, and 30 pips. So we look for extensions into that range, right? So let's say we are in a buy model, right? Let's say this is a buy model towards this high. Once we tap into the high, you will see these boxes get activated, right? And you will see extensions of 10, 20, 30 pips above them, right? Because the market will most likely reach into those pockets of liquidity with increments of 10, 20, and 30. So the foundation of this is to capture the weekly range expansion, right? So we look to enter either on Monday, Tuesday, or Wednesday, and to hold it for the rest of the week into the weekly expansion. I was seeing the fractal model indicator. Um, Honestly, I'm not too familiar with fractal model indicator yet, but I'm sure there's a lot of videos and streams done by other 2 Degrees family members and by T-Trades himself. We can look up some links because I've seen some videos from T-Trades himself come by. That's right, right? I'm correct on that.
No, yeah. There's actually, you guys are in luck because I believe tomorrow I'm gonna find the link, but tomorrow there's a video releasing about the entire indicator, so
Wow,
you're gonna get all your
perfect
questions
timing.
answered right there and then. It's pretty soon.
Perfect, right? Just have to wait 1 day and you'll get an entire video. All right, let's see.
I've
Yeah,
dropped the link of it in the chat if anyone wants to. It premieres in 21 hours, so it's less than a day.
perfect. We can sit in the waiting room already. There we go. So let's see. Price action model 11. Day trading. Um, yeah, the stage is the weekly range as well in here. The setup is looking for daily highs and lows. The pattern is internal to external range liquidity runs, right? So we look to trade to internal range liquidity runs right there. Enter on internal range and to exit at external range, right? What do? We look for 50 to 75 pip ranges that enable run liquidity when institutional order flow is ready. Yeah, watching the 4 videos in the description. Yeah, there's some other videos that he published as well that aid into understanding his model. So yeah, if you want to know more about it, check that out for sure. This is what getting your bread buttered on both sides feel. That's a nice nice way to say it. Right, so what have I done? We have added the last 7 daily candles, so you can keep track of the week, but we're gonna do profiling now that it's updated to profiling, right? We've added the days, so you can see the individual days and the newsletter, of course, or the news, of course, the economical news. And then model 11 is a scalping model, right? So it's focused on the 5 minute, it's focused on the 15 minute and the economic calendar to know where you are in the range. We've done the PO3, right? So we're looking for order blocks and fair value gaps. We look for internal to 20 pip runs. Um, what's the opportunity? We look for 20 pip ranges that enable a run on liquidity whenever institutional order flow is present, right? How do we enter on this? We look for a 5 minute fair value gap or order block on a 15-minute retracement during the London open kill zone or the New York open kill zone, right? So that already narrows it down in terms of when to trade. You only have to sit there during the London open kill zone and New York open kill zone, and the rest of the time you can do something else. Study, for example. Uh, Model 12. Do we have Model 12? There we go. Best order to watch and study ICT content. Depends, man. Personally, like my opinion is, um, I know core content is hard. Like if you're really up there to want to know everything, right? From A to Z, I'd say watch core content first, right? Then watch high probability scalping. Watch 2022, 2023, and then you can catch up with 2024, for example. So if you want to start with like knowing nothing from financial markets all the way to advanced order flow, I feel like this is a very solid watch order, in my opinion, right? And then all the other playlists that are out there, they are basically supplemental towards this, right? Yeah, Market Maker Primer also. Yeah, I love that one. It was probably the first one I watched, I think. Yeah, let's add Market Maker Primer in there as well. Right, because it's very simple and explains you what a retracement is, what is an expansion, all those different phases and stuff. So, Maker Primer. Yeah, let's add it in there. So yeah, I feel like this is a very solid way to watch it. And in terms of amount of hours, it takes some time. I think core content's around 56 hours or something. Um, yeah, it's a long course, but I'd say just watch everything because if you do not know what type of trader you are yet, core content is going to be very useful because he goes over every single type of trader and type of analysis and trading there is, right? Do not binge watch. Yeah, make sure to take everything up, take notes. Don't rush it because you'll forget what he says, and then you'll be in 2022 and forgetting what propulsion blocks are, and we don't want that, right? All right, and then I created the one setup for live, which probably a lot of people are familiar with. Did I miss a question? Can I share an example of that too? From which one? From price action model 12? Model 12, right, 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 right. Okay, so we're not very. Let's see. 5 minute entry. Yeah, so we're looking for 5 minute fair value gaps or order blocks on a 15-minute retracement during the London Open kill zone, right? Okay, today there's not so much to do, but let's check, right? For example, right, we have a liquidity run right here. Wait, we gotta take out this one. I'm not sure if we actually reach above it or not. So this is the 15, and Then we have a retracement during the 15. That's what we look for. Retracement up into an order block right there. And then we look for a 20 pip run, which is right there, right? It's very simple and statistical with like 20 pips and you're done, right? It's not really based on you look for liquidity pools. It's just 20 pips and you're done. And then we have the one setup for live. Are people familiar with one setup for live? I think so. I hope so. If you've watched the 23 mentorship, just let me know if you do know it or not. No? Well, if you don't know it, I'd suggest go watch that video. It's a very good one. It's a video it's more like a lecture, right? In a lot of episodes in 2023, it's market commentaries and that kind of stuff or live streams, but this one is like a prepared lecture where he explains 5 different models, right? One model for each time of the day, right? So it's just a very simple framework for each time of the day to use to trade, right? So one of them is the opening range gaps. One is using the London session liquidity rates. One is the AM session ranges, New York lunch range, and the PM sessions ranges. Yeah, that one. Perfect. Right. And fun fact, opening range gaps. Anyone familiar with dynamic opening range gap? Or dynamic RTH gap, the indicator? By the man, the engineer? No, what is it? Well, from all the people, you should be able to know what it is. Yeah, so fun fact, um, the indicator is actually based on the first one, right? Mr. Engineer told me a little secret, and he said once he watched this, it was like a paradigm shift for him, and he created the dynamic RTH gap tool based on this, right? Oh, and now we clicked on the wrong one. Oh well, we'll look at let's see, we can close this.